officially live on YouTube for the Thursday edition of the Not Your Average Investor Show. The JWB Rental Liquor Property of the Week. Yes. I'm your host, Pablo Gonzalez. GC cannot be with us today. He is on a special day away with his wife, planning out 2023 is what he told me this morning. So really exciting stuff. But we do have a very special guest investor today. He is a super member of our community. He is one of our international member, one of the few internationals all the way from Spain. Miguel Ángel Sanudo. Say hello, Miguel Ángel.
Hello. Hola from Spain.
Hola. Where are you in Granada right now, Miguel Ángel?
In Granada, yeah.
Love Granada, man. Love Andalusia. I love Granada. Let me know in the chat if you've been to Spain, if you've been to Granada. And of course, we have our amazing community manager who we call MTM because she brings us the moments that matter and because her name is Madison the Magnificent. Say hello, Madison.
Hello, everybody.
And we just want to say that if you're listening to us on the podcast somewhere in the future here, when we repurpose this thing or watching on YouTube, we'd love to have you join live and be part of this experience, be part of this community. Go to NYAIS.com and just you'll see that we go live on Tuesdays and Thursdays, put it on your calendar, be a part of it. And you get to take part of a little tradition that we call what, Miguel Ángel? You know what the tradition is? It's the roll call. We got Madison in the house welcoming everybody. We got our leadoff hitter, John Henning, saying good afternoon. We got Karen Jensen in the house, the Duchess of the first family of the Not Your Average Investor Show. We've got we got somebody joining in from the text message that is opted in as Not Your Average Guest. So I don't know your name unless you change it, but he says Miguel Ángel in the house. Hello, JWB fam. Somebody that's definitely a regular here. We got Leo Faraganan. Saying good morning all from stormy Bay Area, California. Happy New Year's. I heard that the Bay Area has got the biggest waves that they've had in 15 years, Leo. You're just going to have to let me know about that. We got Nadeem Shah saying good morning, good afternoon from the West Coast with his trademark hello. We got the Rileys in the house, the second family, our regulars from Murrieta, California. The Rileys are checking in. Who else? We got the Mountain Man, Bill Green, welcome, saying hello from the mountains of Colorado. We got Tony D in the house saying greetings, friends. We got Not Your Average Guest, somebody else coming in from the OC here in California. Who else we got out here? All right, and Miguel Ángel, you bring the crowds, buddy. They're here to watch you speak. We got the ringmaster in the house, Drew Barnhill, saying good afternoon to everyone. And Marie Rockoff is back. Marie, good to have you here. We got Ken and Carolyn Moline, the patriarch and matriarch of the first family, checking in the house. We salute you. And we got Aaron O'Neill into the lights, wishing everybody a hello. This is awesome. I love the roll call. It is one of my favorite segments. We're going to kick it off into a little bit of Miguel's story, then the property of the week, then more into Miguel's story. We're going to dive into his portfolio. But first, it's my favorite segment of the week, which is when Madison shares good news.
Hi, everybody. All right. So this week's good news is a little bit of a JWB core value call out to one of our departments here, the property management team. So at JWB, one of our core values is be passionate. And this team has shown just how passionate they are about what they do, making sure that you clients are receiving the best risk-adjusted returns possible. And they do that by renewing leases. So our property management team had a goal of renewing 72% of all the leases in 2022. They beat that goal and renewed 72.3% of the leases. So when leases are renewed, it means less vacancy and turnover costs for you guys, which means more returns and cash flow. So super big props to them. It's an honor being able to sit next to them and watch them work. So that's my good news.
I love it. Like you said, to me, renewed leases is I think it's the hidden hand that actually makes the number on the property return, right? Like on the thing that everybody's looking at really outperform to live up to that.
Yeah.
Under promise and over deliver. What's that core value? That's how you guys do it, right?
Under promise, over deliver. And we, just to put in perspective what 72% of leases are, we manage over 4,900 homes. So they renewed 72% of 4,900. So if y'all want to do the math, that's just blows my mind. That it's a crazy number. So
Amazing. Miguel Angel, have you had anybody renew lately?
Yeah, like this month.
Yeah.
At the end of the month, at the end of December. Yeah.
Yeah, it's huge, man. Like I know that I just got 2 of my properties were up for renewal. I just got the good news that they both renewed. They both went through increases. And the first thing that went through my mind was, that's good news.
oh yeah.
It's not a renewal, it's a new lease, but it's the same. I mean, I'm happy
yeah.
They
with it.
renew, they also go up to that market rent as well. So
Yeah.
you as an investor win in all aspects.
Love it. Shout out to the JWB property management team on crushing their goal. I know that you all take that real proud in your Tuesday morning meeting. So
Oh, yeah.
thank you, Madison. All right, Miguel Angel, it is officially me and you time, buddy. Why don't you tell folks we were just talking about it, right? Like in a world of not average investors, you are particularly not average because you are international, right? You live in the south of Spain, one of my favorite regions of the world. If you look at my 23andMe, it's like 93% South Iberian Peninsula. So my bloodline is from there. And how did you even start thinking about buying rental income properties in the United States?
My wife's family lives in Miami. And at a certain point, we decided to buy a house there. So we wanted to invest because we were living everywhere in the world. We were moving from here to there. We have a lot of money. Not a lot of money. We have money to do something with it. We didn't want to have it at the bank. So we decided to invest in a property. We bought a house in Miami. Super expensive house. You know, market in Miami is. And then when we had to rent it, I had a lot of issues with the managers and with the tenants and with everything. So after 2 or 3 years, we stopped the main numbers and we saw that it wasn't working for us. So what we did was to sell the house, and with the money we get from that house, we buy a house in Jacksonville with you. Why with you? Because I have a friend that told me these guys work very well, and I do my research, and so far so good. So I'm happy with you. Yeah, this is how it works.
I love it, man. Yeah, that word of mouth, man, is a powerful engine. And we're gonna, you've been investing now. I don't know when you bought the house in Miami, but you've been investing in this turnkey asset since 2019. And we're gonna go into a little bit of your history and what you've learned. You've also been a devout, community member here. You've been to a lot of the shows. I know early on you asked some of the hardest questions, man. So I really want to dive in that. But first we're going to pop up this property of the week, show it to everybody, see if there's any questions on that. I'm going to ask you what you think about it, and then we're going to get into your story. You ready?
Right. Go.
All right, man. I'm going to magically whisk ourselves away here to 641 Herman Street, Jacksonville, Florida, 32205. Let me know in the chat if you can see it and everything is good and I'm not covering it with some stupid box or something like that, which I'm known to do. But it's a purchase price of $290,000, a monthly rent of $1,683. These rents are clicking up slowly but surely here in all these evals. It's a 4-bedroom, 2.5 bathroom home, 1,600 square feet. Construction status January 2023 finish. I've heard it's finished and looking for a tenant right now, which will have a 2 to 3 year lease, annual appreciation rate of 4.6%. And of course, what as investors, what we really look at is this 14% IRR, which is, greatly buoyed by the incentive package that JWB has right now through the end of the month, where you get these 10K buyer incentive packages. And while Gregg, our usual subject matter expert, isn't here, I normally ask him what he loves about the property, and as the prepared guy that he is, he wrote a couple notes. So he put here his what GC loves about his property. I'm pulling it up. He loves this IRR of 14%, right? Like these assets that are beating inflation and delivering, more consistently than the stock market. The brand new construction is something that he loves about it right now. This thing is about to go to market. This first family that lives here is going to be the first family there, which means there's lower maintenance and vacancy costs, compared to the renovated inventory. And like you said, it just hit the market. It's currently available. They're putting people in here. Miguel Angel, you've been to a bunch of these shows. You've bought 4 of these properties. When you're looking at this thing, what's the first thing that you're looking at? What first comes to mind for you?
For me, the most interesting, and the only thing that I really see is the return. I don't care about the price of the house. Well, the price depends on how much money you want to invest, of course. But and if you want to buy one house instead or 2 houses instead of one with the same money, but most important data from here is the return on investment. The rest is not a house for you to live in, so you don't need to like it or not. It's just how much money do you receive in return. That's it.
Got it. Okay. So let's talk about that. You look at the return, you're an educated investor, right? Like that's not the first thing that most people look at. Normally people say other things, but it is what we teach people to look at these assets like, right? So when you see 14% in this thing right now, what are you comparing that to as far as a return goes?
Mostly the stock exchange. So as you normally, probably everybody knows, I've been reading a lot. And so the most you can get from the stock exchange in the cycle and the economic cycle in 10 years, let's say, is 7%. So here's 14%, is doubling it. So, and like now when you have inflation and a little bit of crisis everywhere, so the stock exchange are losing, most of the people are losing money there. You need to keep the money there in 10, 15 years. Here you see from the very first year you can get money. So the return is much better here.
Yeah,
but of course, diversification is the idea in general. You don't want to put everything in houses or everything in the stock exchange. You want something half and half or something like that. That's what I do normally. Yeah.
Yeah. Tell me more about that. Right. So when you first bought that house in Miami, did you have like a pile of cash that you wanted to invest? Did you take it out of the market to do that?
I take it out from the stock market. Yeah.
Yeah.
And it was a good moment to buy in Miami because I knew the prices were going up. As it happened at the end. And we were lucky to have, because my wife's sister was living there. So we decided to have living in our house. So it was an opportunity for us also when we were there for visiting them to have a house. It wasn't just like for investing like this one, because you don't care about who's living there. You just do the investment. In that case, was just a house for us and for our family. But it turned out that they moved to Houston. So we had the house and we have to rent it. And then all the problems came because the manager wasn't that good. So this is another difference that we have with JWB, because we are very happy with the company, because we don't have anything, because we are living abroad, very far away. So we cannot have any hassle. We have to have everything easy. We cannot go there and visit them, solving problems as we had before. So that's the most important thing for us. I don't know if it's everybody the same, but for us, it's the most important aspect of the investment.
Yeah. I think, what you're saying, I think is everything that I've heard from Gregg. And I know that it's the smart way to do it, right? Like we are, little spoiler alert, we're thinking of putting together a class on rental property investing for people. And one of the modules of the class is, how do you make this decision? Because to your point, most folks will think, how do I, where do I find a property? And is that property in a market that I like? And then do I go find I then go find a property manager? And what we espouse is this idea that the property manager is what makes the thing work for you, right? So
Exactly.
find a team first and figure out where there is a team that can execute this thing long-term for you. And once you have that, then decide if that market has the dynamics for you. And then the last thing is the property, right? Like the idea that
we learned that the hard way. So we bought first the house and then we get the manager, which is not the good way. The good way is the opposite of what you say. First get the management team and then the house. Yeah, correct.
Awesome, man. Great data point. So I'm gonna take the property off. If anybody has questions about the property directly, I want to dive a little bit more into Miguel Angel's story and get his experience. And I think there's a lot for people to learn here. Mike Foster, I see that you got a question in the Q&A. Mike is asking, if a JWB investor is in the process of purchasing one or more properties this month to tap into the incentive package, but the process isn't quite completed to get the properties under contract by January 31st, is that date an absolute deadline? Mike, as you guessed in your preface to the question, without Gregg in the house, I'm not really the guy to answer that, since I don't actually work for JWB or have any pull inside JWB, but I think that that's a conversation with your property manager and or post it in the group, man. I'm sure Greg will chime in for that one. But I don't get the sense that I believe that it is an absolute deadline as far as I know, but that's just a guess. So Miguel Angel, we were talking about this idea of deciding on the property manager first because you had this experience in Miami. But before that, we were talking about how that house in Miami, you took money out of the stock market to buy that, and then because Miami is such a high price market, you're able to take the sale of that property and buy multiple Jacksonville properties. And you now are up to 4, right? So like,
Yes.
is your portfolio right now still all profits and like that initial pot of money that you had in that house in Miami, or have you been also cashing out other things from the market in any way?
No, this is mostly from the portfolio that I have in Jacksonville. So as I told, we bought the house in Miami because we wanted to diversify our investment. And then it turned out that we sell it because we wanted to sell it because it didn't work very well in Miami. So we started in April 19, first house. And then in 3 years, I bought the 4 houses. But I can buy more now because as I told you, I had to buy all of them cash, which is not easy. So I have to say before, it's not the same that when you have a mortgage and you pay a down payment of 40,000 and you can buy another house. I have to pay everything in cash, which is not easy.
It's true. And to just kind of clarify that for our audience and for our community and anybody listening to this thing, there's 2 ways to buy a property, right? You can buy, as Miguel Angel did, is save up enough money to purchase it outright. And at that point, you buy a house. The cash flow is higher on a monthly level because, you don't have a mortgage. You don't have that expense to pay down. You only have maintenance and property management and whatever other regular things happen. But it means that you got to come up with more money to put it down. In today's climate, that's what we're seeing a lot of people doing, right? Like people are taking equity and turning it into income, right? Instead of buying cash and putting it into stocks and letting that equity go up and down, they're putting it into properties and getting cash flow that way. But the other way to do it is to finance it, right? The idea that instead of having to come up with 100%, you can come up with 20, 25 or 30%, put that down. Now your cash flow is a little bit lower, but you didn't have to put in as much, and you get a couple of other tax benefits. You still get appreciation and all those good things as well. What I wanted to go to, Miguel Angel, is when I feel like it takes a lot of courage to invest from so far away, right? Like, and I think when you started in Miami, it was like, well, my sister's going to live here, or you said, or your sister-in-law is going to live there. So that's like, okay, well, it's a house for the family. Then you took it out and you realized that property management wasn't bad and you decided to go back in. How did you do your decision-making process, right? Like what was, where were you looking, and what convinced you that there was certain types of property managers that can actually do this stuff versus the experience that you had in Miami?
I'm quite square-headed, so I try to research a lot, investigate a lot. So I've been reading a lot about market in the US, what the managers were the best and where to invest, what cities are the best to invest, where you get the more return and everything. And once I found out everything, I decided, let's go how it goes. If it goes bad, I always can sell the house because I buy cash. I can sell the house immediately. I won't lose a lot. But if it goes well, as it did, in fact, well, it's the future. It's the future road to go in investment of this kind. And this is the decision that I took. Yeah, I took the money from the Miami house and I bought the first house in 19. And at the beginning, it wasn't easy because I don't know anything about the market in the US. I don't know how it works, where you have to sign, what you have to do, what you have to pay, when, and what. But you made me everything so easy and so smooth that it was perfect. It was like, I see the open sky. So go through here, you won't have any problem. And how it worked. It worked very well.
Yeah. Okay. So when you say you made it easy, you're talking about like JWB making it easy for you, not me.
Yeah.
But I feel like, one of the big reasons why we started the show is for people to have insight into, right, like what is happening in their investments, and to have that, like, if you're not super familiar with it, to be able to get comfortable with it. And you early on were you were very much a part of the community from early days, and you haven't been around as much recently, but you continue to show up every once in a while. Like, what made you start showing up to the show and kind of being a part of this thing?
Because I'm not used to, as I said, I'm not used to the market, the investment market in the US. So I had to learn very quickly. So I just bought my house and I didn't know anything. So I don't know who keeps on working in the house, how much you have to pay monthly, how do you get the money from, when, everything. I didn't know anything. So what I had to do is just to keep coming to the show and learning, making questions, stupid questions many times. But I didn't know anything. So I had to, and that's what I do. They
awesome.
say there's no stupid question, but so yeah.
I agree. You know what I would like to ask you, Miguel? Did you have some hardships kind of at some point, right? Like I remember when you first came on, there was some questions where I was like, man, is Miguel having have there been any kind of like tough moments in the whole experience?
Yes, few.
Honest.
I have a terrible addiction last year. So They owe me a lot of money. So they didn't go away. So it took like, I don't know, 8 or 10 months before leaving. They owe a lot of money. So then another house, when I bought it, after a month, and it was renewed, after a month, we had a huge problem. We had to spend a lot of money on this house after buying, which is also wasn't good for me. A few of them. Yeah, I experienced everything. So now I know a lot.
So it's interesting, right? Like those are kind of like those are the two biggest fears of investors, right? Like that, the nightmare tenant eviction and the buying a property and then like having unforeseen expenses, but you're still positive about it? Like, let's explain to me.
I'm positive. Yeah, in general, I'm positive.
Yeah.
I think I had a few bad luck at the beginning, but in terms of how easy I'm going with it, and I'm not worried about how it works and now how JWB dealing with everything. They answer all the questions that I've made and they answer very quickly. So I'm happy. This is what I wanted. I don't want like it happened to me in Miami, my previous house, when I made a question and it took like 2 weeks. I have to make a lot of calls. Nobody answers. So in this case, it's totally different. So this is make me feel safe somehow. I know things happen because it happened, but it's not anybody's fault. But unless I know that I have a company in my back solving all these problems from here, because I can't do anything from here. I'm very far away. So I cannot take a trip and a flight and go and see what is happening over there. I have to trust you. Now, we have a 6 hours delay. So probably when I do the question, you're still not in the office or the opposite. So yeah, it's not easy.
Yeah, I bet, man. I bet. So what I'm hearing from you is a couple of things. Number one is the idea that you recognize that this asset class has a level of variability of the human scale that you assumed would happen. So best case scenario is just like rapid resolution of the things that are happening, and whether it's not the property manager's fault. What is on them is to be very responsive and like take action, and that satisfies you. And then the other thing that I guess I'm hearing, but you're not explicitly saying, is I think in order to be okay with that, you have a long-term outlook of this thing, right? Like, can you tell me kind of like what your outlook is on this investment and why those like short-term moments didn't make you run away immediately or assume that this was a failure?
Well, mostly now because the stock market is very bad. I've been thinking on investing in another country. But I don't feel that safe because I know in the US, the market is quite reliable. Law is quite stable. You don't change law. Well, it happened during the COVID with the evictions, but in general, it doesn't happen. But here in Europe or somewhere else, it's crazy. I mean, you can invest a lot of money and then the next month they put you a new tax and you have to pay more. So you never know if you're going to receive the money, and if you can beat the tenants if they don't pay. So it's crazy. In the US, it's quite stable. So you are happy to be there. Yeah. This is the main thing why I decided to keep in there, even if I have a lot of hassles during the process. Yeah. But it happens in every investment. Yeah.
I think that's something that people really take for granted here in this country, right?
Yeah.
Like the fact that you can do that here, and even when there is like the eviction moratorium is like like a very rare black swan event that happened during COVID, but that's just life in like France. You can't really evict anybody, or other European countries, and there's a different degree, right?
There are two different countries in investment in property investment. The countries that they are pro tenants, and the countries that are pro owners. US is kind of pro owners, but here in Europe, most of the places are pro tenants. You cannot evict a tenant if they don't have a job, or they lose a job. You cannot evict them, even if they don't pay. They stay there. So you pay bills, and you receive anything. So that's the thing. There's another reason why I decided to invest in the US. Yeah.
Yeah, and even in the US, there's pro-tenant states and pro-owner states, right?
I don't know that. I know Florida.
Yeah, exactly. So Florida, we get the luxury of doing that. Other states like California and New York, it's a little bit more difficult with different laws as well. What do you do for your living? What's kind of like, what does your family look like?
What I did.
What
I call a FI. It's a financial independent retired early. So I retired quite early. And I used to be working in an oil company. I'm an exploration geophysicist. So I moved all around the world. So I know a bit of every place. And yet I enjoy it very much. And now I settle, I hope definitely, here in Granada, my home city. And that's what I do. Now I do nothing, just investing. From time to time, I connect to you or checking the stock exchange and see how it goes and reading and things like that. Yeah.
What do you, as a full-time investor, retiree, like early retiree, that's, by the way, congratulations. That fire thing is real, man. That's amazing. Yeah. How did you get there? How did you get to this like fire place? Like, what was kind of like the path to get to it so early?
The path. Okay. Normally comes from conversation from friends. I have 3 friends working in the same industry than me. And we say, what we do with the money we make? The oil industry makes a lot of money. And what are you doing with the money? Because I don't want to have it in the bank. Bank is not giving you anything. So we start reading and investing in stock exchange. And we didn't think it was enough. We wanted to diversify. So we said, well, let's go to also buying properties. And this is how it works. Yeah. Amazing. It wasn't easy, but it wasn't difficult either. So you have to do the money. The money has to work for you. You don't have to work to get the money. The money has to work for you. So once you make numbers and you decide, okay, this is enough, I can live with this, then you retire. Yeah.
Awesome, man. And I see you got a tennis bag back there. You've been playing a lot of tennis. Yeah.
Oh yeah. Yes. Spain, Nadal, all the things.
Yeah, Nadal. Yeah. I know very well the culture. Yeah, that's awesome, man. Where else do you get your financial education from these days, right? So like, I know that you're a part of this community, so you listen to this podcast. Mm-hmm. Are there any other podcasts or newsletters or other communities you're a part of?
Books. Mainly books. Yeah.
Mainly
here
books.
In Spain, financial education is very limited. I don't know in the US, but here is very limited. Also, nobody. There are people that don't know what is inflation or what you do with the money or what are the returns. They don't know anything. So I have to learn a bit through the business, of course, when I was working, but it wasn't enough. So I keep on reading, and then YouTube or reading, I don't know, all these things you have now.
What's a good book on like money that you've read recently that you would recommend to the community?
First one that I read was Rich Father, Poor Father, or Poor Father, Rich Father.
Rich Dad, Poor Dad. Yeah. That's the one.
Yeah, that's the one. Yeah.
Yeah.
And from then on, many few. Yeah.
Yeah. What's the last one you read?
Now I'm reading some liberal stuff. I don't remember the name. I'm very bad.
Okay.
I don't remember any title books that I'm reading. Yeah. Some liberal economy, something like that. It's not investment anymore. Yeah. I've been reading investment and a lot of ETFs. ETFs for investment? Yeah. Exchange trade funds.
Yeah.
That's what I'm reading lately. So I'm kind of conservative investor. I'm not very risky one because I have to save my retirement.
Yep.
Yeah. And it changes with the time. Yeah. When you are younger, you are probably more risky than when you are older.
Tell me about that. Tell me about the kind of like how you think about allocation across your portfolio. When you said you're not very risky, right? So we kind of talk about how in my eyes, this rental property investing kind of like this bucket is that like non-risky kind of area that's going to be very, very consistent going forward, as long as you have the cash reserves in the short term. Do you see it that way? Is this like your more risky? Is this your less risky part? What are the other pieces?
I think long term is about the same.
Yeah.
The risk is about, well, you have to, in this case, for a property investment, you have to be in a country that is, as I told you before, stable, and the US is stable. And then what you do is just assets allocation. Where do you want to put your money? So how do you diversify money? Not only putting everything in dollars, but in different currencies in the world. So there's a lot of these things that I've been reading. So yeah, you have to think, whether you get the money to get immediately cash, or you want to sell it when you're older and get the money back. You want to receive during the process money? How much money do you want to get? Are you more, I don't know. Yeah, this is how it works. Yeah.
And within that, right? Like right now you are, what kind of like, what would you say like a percentage of your portfolio is in real estate versus ETFs versus other things?
50-50.
You're 50-50?
Or maybe 40 properties, 60 stock exchange and everything related. Yeah.
Yeah. So that to me is what I'm glad you said that number exactly, right? Because everybody talks about the 60-40 portfolio. And there's like the 60% that it used to be 60% stocks, 40% bonds. And the idea that you can have 60% stock, but you can then put 40% into cash flowing rental income properties. And it serves as that bond side of the portfolio with a much better return, to me is what I'm starting to notice.
Yeah. I used to balance 1 or 2 times per year, but remember, if I want to put more money in properties, I have to buy cash. So it's not easy. Yeah.
That's right.
So for me, balancing with the property is not that easy. That's why I keep on with the 60-40. I would like to be maybe 50-50 or even 40-60, but it's not easy. Yeah.
Got it. I want to go through. So this has been awesome. Like hearing your story and kind of like your insights and all this is really educational. I want to go into, Gregg put together your portfolio and how it's performed. And, we got a good reveal for you here, but I know that normally when you start with JWB, they ask you your why. Do you remember what you had said your why was for investing in rental properties?
I wanted to get cash.
Okay.
Yeah, because when you invest in stocks, you don't get cash unless you sell it. And I want to get cash. So that was the only way to do it. Well, there are different ways, but this is, I think, the safest way to get cash. Yeah.
Yeah, I got it. And that's why you bought
cash flow. I mean,
yeah cash flow, right? Because you bought in cash in order to maximize cash flow from the rental properties, not having a mortgage and stuff like that. All right, Ken Moline, the patriarch of the first family, has got a question for you. Did you buy any Jacksonville properties for cash? And what is your balance between wholly owned and finance? So you want to tell them?
100% no, everything cash. Yeah. I didn't have the chance. As I mentioned before, I didn't have the chance because I'm not a US citizen. I didn't have to get the chance to get a mortgage on the US bank. So I could get it from the European bank, but it's not good. It's not worth it. It's very high interest. So I decided to buy it all cash. Yeah.
There you go. There you go, Ken. Miguel is all cash all the time right now. But I'm glad Ken chimed in because he's somebody that also in his later in life, he got into this asset class also to maximize cash flow with a reverse mortgage from an old house, right? All right. So Miguel Angel, this is your portfolio, man. You bought your first 2 properties in 2019, right? Like started in March, and then you went back in December, and then again in October of 2020, and then again in February of 2021. This February 2021 is right around when I bought my third also. Is there, like I'm looking at the purchase prices, very different than the purchase prices that we show on the show these days.
I noticed.
Yeah, which for you is good, right? Like does that means
it's good,
yeah. Can you tell me a little bit about the pace of this, right? Like was there cash that you had to were you thinking about like timing out of like cashing out of your stock portfolio to buy these, or was it something else that was driving kind of like the pace?
No, once I cashed my house in Miami, it was very quick. So I decided to to buy a house in Jacksonville with the guys. Then I talked to some of the guys. They presented me a few opportunities, and I decided, okay, I like this one. And it took no more. I think in 2 weeks it was done. Yeah, I signed all the papers through the website and electronically, so I didn't have to travel or anything.
Mhm.
And after 2 weeks, I got a house. And then contract was signed almost immediately, the first tenant contract, the first rent contract. And that was it. Yeah. And the second one is the same. If you notice that first two houses, they are new houses. And then I say, okay, why not going to renew houses? So the last two are old houses, but I think they are cheaper, but they work very well too. So yeah.
Yeah,
No,
you see here the new construction ones are a little bit more expensive.
Yeah.
The second ones are less expensive, but they're still getting up there because they had already appreciated in price by the time that you
in 1
bought
year and
these.
2 years, the
Yeah.
price changes very quickly. Now you pretend to buy my first house probably is about 250. I don't know. Yeah, it grows very fast. So guys, buy the house now. Don't wait. Yeah.
Yeah, they say that you can always, it's not wait to the right time to buy real estate, it's buy real estate and wait, right?
Yeah.
So you went in, you bought these all cash. Is there, so I guess what I was asking you talked about the purchase experience of like you sign the contract and you get it, but had you planned this idea of buying every like 8 months or so, or was it? No,
He came out like this. Yeah. No. First two houses, I got the money, right, because of selling the Miami house. The other two, I decided to buy more because I want to diversify from the stock exchange.
From the
So
stock exchange.
I sold some stocks. And the moment that I got enough money, I just bought a house and then the other one. Yeah, it was like this.
Yeah,
It wasn't
that's good.
decided that to wait a year to buy a new one or anything like that. No.
Yeah. It's been that way. It's been that way for me as for like, it's just whenever I unlock enough money, I buy a house. Right?
Exactly.
That's how I've done it too. So so Kai, I hope I'm pronouncing your name correctly, has a question for you. May I ask how much cash flow do you get from your portfolio? What's your like monthly cash flow that you're getting from these houses?
When all of them are rented, about 5,000.
About 5,000. There you go.
Yeah.
Pretty good. That's good money, man. So then Gregg goes in, that's your portfolio. He then goes in, looks at your highest ROI that you've gotten so far, not including appreciation, lowest, and then he puts together like a whole snapshot. So this looks like the Gregory Place. Gregory Place is the last one that you bought, has the highest ROI. 2021, you had 6.16%. Again, these are ROIs based on purchasing in cash, which show up a little bit lower.
My numbers are quite different because I also include how much taxes do I have to pay and also the home insurance, which is rising a lot, and the property taxes are also increasing much higher, much quicker than the rent. A little bit lower, but yeah. More or less the same.
So can you explain that again?
Yeah. Those numbers are just without, in my case, I have to pay taxes because I'm not a U.S. citizen. I'm paying taxes as a foreigner, so I have to pay high taxes. And then this is calculated with the initial home insurance.
Okay.
And the home insurance price are rising very quickly now, so that's much higher.
Okay.
In fact, this year double the price that last year. So
from what to what? What was the price before and what's the price now? Do you know?
I pay 1,121 and I'm paying 2,100 this year.
Wow.
22.
A year.
So
Yeah. Wow.
yeah, a year.
Wow.
And
Is that for all of them or is that for the rehab ones?
especially for this one, I don't know why.
Just for this one. Okay.
The government decided that I had to pay more because it was, I don't know, in a particular area. I don't know why, but I have to pay a lot. So it made reduce the return, I would say, an average 4.5%. Yeah.
4.5. Okay. There you go. Did you adjust the expected annualized returns that they had given you before to your tax situation? Is that something that you've had to do manually on all of them?
Yes.
Okay. Got it. Okay. And then the lowest ROI, I'm assuming this has to be the one with the eviction.
Exactly. Yeah. That was terrible. Yeah.
Yeah.
Don't show this. Move.
Yeah. Well, just kind of show the good and the bad, right? So this had an eviction in 2019, which definitely, or whenever it was, I guess it was 2020, 2019, but it knocked down your return expectations. And 2021 seemed to be a good year, but you're sitting at annualized lifetime returns of 3.76, which is underperforming some. Does that sound about right?
Yeah. Now it's about, with all the calculations that I made, it's about 4.5%. Yeah.
Okay. So
My
now it's-
taxes, I have to pay taxes as well. Yeah, but this house are the problem of the eviction. It can happen to any of you. It's just a matter of luck. So what else we can do? Nothing. So, and it was a special COVID situation when you cannot evict anybody. So the guys have to spend a lot of money when the guys went out. It was destroy the house inside. So they spend a lot of money. That's why it affects the numbers. So the numbers are bad because of all this. Yeah.
Wow. Was the last one the Susie? No, Greg replaced Miguel's property at 8751 Susis Street, bought in
Yeah.
2019, has almost 100K in equity, is what Leo is saying. Leo, you're. I guess Leo, let me know how you dug that up. I'm assuming you probably went on Zillow and looked for that price. But then here's the overall outlook on the whole. Yeah, Zillow on the whole portfolio that Greg put together. From 2019 to now, you've gotten a total rental income of 74,432. Does that sound about right?
I don't remember the numbers. Yeah, it was,
Yeah.
I think it's less than that. Yeah, less than that
Yeah.
because I have to pay more than
Because of the
have
more
expenses
taxes.
than anticipated, and I don't have any tax savings because I have to pay taxes from as I'm not being a U.S. citizen.
Yeah.
So,
So
less than that,
yeah. So U.S. tax
Wow.
savings, it would have been this much. Sounds like yours is different. The good news is that you've had in just
Yeah.
these like 3 years is this $210,000 in home price
That's
appreciation.
that's the good thing. Yeah. I'm counting on this. Yeah. Otherwise, it wouldn't be profitable. So I need the cash flow, but I also need to home price appreciation, of course.
Yeah.
Because
Yeah.
I plan to sell it in 10 years, let's say, or 10, 15 years. So everybody plans to do this. I don't want to keep it all the time. So
Yeah.
I need the money saved there and it's growing by itself. So
Yeah.
that's a good thing.
Yeah, rising in equity. Consumer pricing index inflation over that time has been 7.7%. So you're beating that. And then this is the actual ROI, right? So on your sheet, the expected return on investment was 5.5%. When you include the home price appreciation, which as you know isn't on those property evals, you're at 14%. So pretty big number there. What do you think of that?
Mhm. Yeah. Well, the only thing that I see here, well, I think I think about it a lot. Good thing or bad thing on investing in properties, if you really need cash quickly, you cannot monetize it quickly. It's different from stock. Your stock, and same day you get the money. Here maybe it takes a month. So if you're really needing the money, you're thinking you're going to need the money, be careful. But if you are thinking on keeping the money there for a cycle, like let's say 10 years, it's a very good place because you don't need to think a lot. Just put the money, let you guys deal with it, and that's it. It works for you. Yeah, it's easy.
Yeah, I see what you're saying. Did you, given that you had those moments of like cash out of pocket for the eviction and the different things, how did you think about your reserves? Like, you had the cash that you put this thing down? Did you have something laid aside for reserves for that type of stuff, or did you have to like cash out stock to pay for that?
No, because all my properties are all cash flow. So I got a lot of cash flow from the other properties to pay whatever happens. So it's not when you have a mortgage and you have to keep on paying anyway, you have the cash flow from any property. I have a lot of cash flow. So I use the cash flow from the other properties. So I was safe in this matter. Yeah.
I'm glad we hit on that, right? Like this idea of getting to like 3 or 4 homes, because when something is wrong in one, the cash flow from the others pays for it and doesn't really have to come out.
The
of
more
pocket
you
as much.
have, the better you are. That's why I'm sometimes thinking, okay, I can buy a house of 250 or two houses of 125. Sometimes it's better to buy 125 because you can have this, you can pay with it. If you have only one house, if you're not getting money, you have to pay everything from your pocket. Yeah.
Yep. And then the other teaching moment we like to show is this kind of like allocation of where the profit comes from, right? Like I think this is always really telling. You're this unique example because you're an all cash portfolio, right? Like you own all your houses outright. But it's this idea that most people obsess over the cash flow sector of the return in different markets or different rental properties. They're looking to hit some magical cash flow number. But at the end of the day, even in the highest cash flow kind of like environment, the rental income looks like a little bit over a fourth of what your total ROI was, while what you're benefiting from, this home price appreciation, this equity, this wealth that you're building is this, this like open mouth Pac-Man here. So we like to show that.
It happens, yes. Cash flow for me is important because I use it for spending in the other houses or whatever it happens, or even in my life. But home price appreciation is the main objective of my investment in properties, yes.
You talked about this idea of holding on for a full market cycle and maybe selling. How likely do you think that when it comes in 10 years or whatever, do you have some reason that you think you want a liquidity event? Or are there other like maybe potential things that you're thinking of like maybe refinancing to unlock something else and invest in other things, or
just living? When it happens 10 years from now, I'm going to be around almost 60.
Yeah.
So before I die, I want to so cash everything and spend it. That's it. Or maybe I'm just kidding. Yeah. But it's true too. Or maybe change the market. I was thinking of buying for a long time now, buying in Portugal because it's all on the other side place to buy.
That's right.
And it's closer to where I live. Maybe I can use the houses there. Yeah.
Interesting. Yeah. Drew Barnhill says, is he eligible for DSCR loans? I don't even know what that is, Drew. Do you know what that is?
No.
All right, Drew. We need to know more, man. We need to know more.
I hate acronyms. Sorry, Andrew.
Yeah. That's another thing. Americans are so used to acronyms, right? Like outside of the US, nobody uses acronyms. Right. That's great.
I tried everything in the US, and to get a loan for me is difficult, and it was expensive. So the interest was very high. So it's not worth it.
Oh, so DSCR, debt service
coverage ratio. No.
Yeah, debt service collateral loan. Maybe something for you to look into that. Maybe with all the equity that you have in these homes, you might be able to unlock something else.
I talked to some of the guys on JWB, and nothing really happened. So it wasn't good. It wasn't good for me. The interest was too high.
Got it. Okay. All right, Miguel Angel, man, this has been, I love getting to spend an hour with you, man. I feel like we've chatted a lot. You came on the Fan Appreciation Show. The second time was the first time that we got to see your face, but this is...
I had to travel there and visit you. Yeah.
Please, man, please.
I'm looking forward to it, but because the copy and everything is so far away, it takes me a day to get there, but I want it. I don't know Jacksonville, so I don't know money put in Jacksonville. I don't know Jacksonville. Yeah. Everybody's telling me it's boring. Is that true?
I don't think so, man. I think Jacksonville is just like a gem, right? Like it depends what you like. It's not Miami, but it's got a lot of beautiful nature. It's got just really nice beaches.
I like it. That's why I like it.
Yeah, it's cool, man. I'm a big fan, right? Like I've loved it here. Restaurant scene is not my favorite, but apart from that, it's fine. If you like the beach, it's great. We announced that we're having our next Jacksonville meetup in February. Maybe too soon for you, but something to put on your radar.
Yeah, I would say at the end of the year, maybe. Let's see. I never say because I don't know. Yeah.
Never say never. That's right. Jen Filzen, fairy godmother of the Not Your Average Investor community, confirms that her and Renee bought flights to come to the next meetup here in February. So if anybody's thinking about that, let Madison in the chat know that you're coming. Miguel Angel, before we sign off here, man, if somebody is, trying to retire early and they're trying to figure out a way to get there, and they're thinking about rental properties or they're thinking about real estate in some way, what advice do you have to offer somebody that just like talk to you for the first time, like I want to follow in your footsteps?
Well, first thing that I did, and I think that everybody thinking on this on return early have to do, is just to make numbers. So make the numbers, meaning how much money do you need for living, not only for regular living, but also if some unexpected things happens. And then, do I gonna get there? How can I get there? Okay. And you start thinking where invest your money. If you have enough money to invest, you save with this, you can keep it living like this for 10, 15 years, 20 years, and then go ahead. Don't think twice. Because you think twice, you lose a train. The train only departs once. Yeah. There's only one station. Get hopping. Yeah.
I love it, man. I love it. That's really good feedback, man. I hope I get to be like you and get to, have this portfolio that I can live off by the time that I'm 50 and play tennis all day and enjoy my life.
Exactly. Walking the dog, playing tennis, go for swimming and traveling around. Yeah.
It's wonderful.
You have to work a lot before. course,
Little
you can
ski
do-
in the Sierra Nevada. Do you go to Sierra Nevada to ski
Yeah,
at all?
20 minutes from here.
Yeah.
The lifts are 20 minutes
That's-
from here. Yeah.
That's where I learned to ski as a
This
kid,
is
man.
the original Sierra Nevada, not the California one. This is the original one. Yeah.
That's right. That's right. All right, man. This has been great, man. I really appreciate you coming on and being on. I want to thank the community for being here, right? You pulled a great crowd here, and they're talking about thank you, Miguel and Pablo and Madison. This is a great show as always. Love it. Thanks for another great show. Obviously, the community loves the interaction. I want to invite you all. Tuesday, we're back into Not Your Average Insights segments. We're talking about how rents perform during recessions, which I think everybody cares about, and why experts are calling this a white collar recession and what that means. So I think we're going to have a really, really fun, actually, is that what we're doing? Don't quote me on that. I know that that's what we're going to do, but we're bringing back Not Your Average Insights next week. It's going to be really, really awesome. Miguel, man, I just appreciate, I'm a Spanish descent. I love talking to you, man. And I love seeing somebody in
Gracias, Pablo.
in
Easier for me speaking in Spanish than in English, man. Sorry for that, but I strong
Man.
English accent, strong Spanish accent. Sorry, but I think you understand. Yeah.
I think that's something that we gotta say. Doing a live internet talk show in not your native language takes a whole ton of courage, and you did great, man. And you gave a whole bunch of values.
Thank
I really
You
appreciate you
liars,
doing
you
it.
liars. Yeah.
All right. And I hope to see everybody on Tuesday next week. GC will be back. And until then, if you want to retire early and you want to, release cash flow and get into rental properties and you want to be like Miguel, you can't be average.
Do it now. Do it now. Yeah.